Federal Reserve, first of all, the Federal Reserve is a fraudulent Ponzi scheme to begin with. But if we go past that, okay, no Federal Reserve has ever hiked rates into a recession. Now, I know that this administration has moved what the bar of a recession is, because it used to be 2 negative quarters of GDP. But they decided to change that. But I want to know what they're going to come up when we get the third quarter of GDP that's going to be negative as well. I tell everybody, you don't need an economist to tell you if we're in a recession or not. Look in your own bank account first. Look at the amount of money you're spending compared to what you're taking in. That'll give you the best idea of whether or not we're in a recession. I mean, every person suffers differently throughout a recession. We bring it in as a very broad scope, but at the end of the day, the average American is struggling right now because interest rates are rising, gas prices are rising, energy, heating your home, air conditioning your home, groceries, you name it, they're going higher, and the Americans are not keeping up with the cost of inflation, no matter what the ridiculous CPI or PPI numbers come out at. Me personally, I hedge. I use derivatives to hedge my portfolio, and I actually have a hedging model that I teach to my members. But I believe in staying in the market. The fortunate part about the United States of America is that basically things change every couple of years, right? If you're not happy with what's happening now, 2 years from now, well, actually in 2 months, we're going to have another election. And then in 2 years from now, we're going to have another presidential election. So if you're not happy with what you have, it changes. We don't have a leader forever. So I think that the biggest thing to remember is that the markets have gone up since inception, 8.5% year over year. And since 1950, they've gone up 10% year over year. The worst thing you can do is panic or puke and sell out at the bottom. Now, again, you have to also analyze what you own. I mean, if you own many high-risk stocks, like let's say Beyond Meats for one, that doesn't make any money, you have to consider getting rid of the crap, because again, it's going to be the companies that make money that are going to survive through all these turbulent times. I mean, you go back to a basic little nothing AT&T stock. If you'd have bought it 30 years ago, $10,000 worth would be worth over $1 million today. So, again, you have to understand that the markets go through these phases, whether they're big or they're small, whether they collapse or not. We're not going out of business. The United States at this point is not going out of business, and I don't think that the companies are either, but you have to be selective. And, I'm not a fundamental guy. I'm a trader. I'm more of a technical guy, but as a fundamental guy, I look for good stocks that I know or in my mind will be in business 20 years from now, so that I don't have to worry about those companies, knowing that they will survive. And that's, I think, what the average investor has to do. We get too anxious to trade the market. And the last thing is, the biggest fault of most investors is when they have to sell something, they go to the winning stuff and sell that, trying to hold on to the dogs. And listen, dogs have fleas for a reason. They stay there and they become bigger dogs. And then you really put yourself into a problem. Every Monday night, I do a couple of hours, actually. I mean, it started out as an hour, and now it's like there's a pregame involved, and I just talk and yap for a while. But I talk to anything from, a little bit of what's going on in the world, a little bit what's going on in politics, a little bit what's going on in markets. And then we look at about 30 different futures markets. And then we look at about 30 different stocks. And I give you what direction we are, because I'll disclose my positions all the time, exactly what I have, because I carry 30 commodities and futures overnight, every night, 365 days a year. And I carry all of my stocks. I mean, I'm either trading or investing, but I'm always 100% invested in the market. So I'll go through a bunch of technical reads on stocks, and then I'll answer questions. When we have time at the end, I usually will let 5 or 10 people ask me about specific stocks, which I'll read live, and I kind of leave them marked up. I don't use indicators. I have my own indicator in my mind from being a floor trader. And I was a floor trader for 35 years out of my 44 years in business. So I never had to use a chart, but now I leave everything in place. So when we go back and look the next week, you can see exactly what I told you and exactly what did happen. And of course, we're not always right, but we have a pretty good general idea of where a market should pause, where a market should rally from. You get in these directions that are too parabolic in one way or the other. There has to be some mean reversion, because the markets are mathematical and mechanical, and they don't get sick and they don't get tired. They trade every day. Okay. Yeah. I do believe in cryptocurrencies. I know they've struggled recently. I know there's a lot of government pushback. Okay. But we have to get out of the grasp of the central banking system, or at least get out of the grasp of somebody who can decide to add more to the money supply just because they decided they needed more money. Because really, added money to the money supply is really what? It's really devaluing the currency that's sitting in your pocket. I have to say this and warn everybody who's called for the end of the market and the end of the world. I mean, there's guys, and I won't name names, but have been calling for the end since 2010. Okay. Where would you be if you listened to them since 2010? Nobody can predict when this collapse is going to happen. And if the market would actually go down 90%, we would have a lot more problems to worry about than where your money was invested, because these other assets aren't going to go up. And if you're banking on the TLT, which is benchmarked against treasuries, and you're banking on the full faith and credit of the government, you ain't going to have a dime left either. Okay, that's what bonds are. The United States bonds are backed by the full faith and credit of what? Of more paper, more debt. Okay, so again, if we're going to get that kind of move, you got a lot bigger problems to worry about. And I can't ever make those types of predictions because I think they're irresponsible and they will create fear in people that shouldn't create fear. Look, I know things are tough, and right now you got the 10-year at 3.5%. I mean, certainly 3.5% is not a bad return. Okay, if you're willing to switch. But what happens is the greed factor kicked in here now, right? Because the market's going up for so long, they forced in people that didn't want to be in markets, that wanted a fixed income, and now they got excited because they were making so much, and suddenly now it's going away. But you got the 10 years right there for you, 3.5%. What's wrong with that? It's guaranteed money for 10 years at 3.5%. And if you just look in history, okay, we've all heard stories of some guy who you knew never made any real money, dies, and he leaves $10 million to his cat. Well, where do you think the $10 million came from? It came from him leaving his money in the market and letting it compound over time. Because historically, since the beginning of time, it's 8.5%, which means that every 9 years it's going to double. Okay, and you start doubling and doubling, and it all of a sudden becomes real money.